I think insurance is going to be a very interesting financial model in the future, specifically with Bitcoin. Warren Buffett showed us the power of having a float with insurance companies. So imagine if you're good at adjusting risk, if you're good at writing risk, you get the power of the float, put that into a Bitcoin standard. I think that's pretty powerful. I think about liquidity. So Bitcoin is, of course, peer-to-peer electronic cash. And so like I could peer-to-peer electronic cash with any of you here, and that's great. But if you're Walmart with 10,000 stores globally doing $680 billion, peer-to-peer electronic cash isn't really working. So you're still going to need payment providers. You're still going to need to pay hundreds of thousands of employees, to payroll companies. So a lot of financial solutions in that space.
So because Bitcoin has been able to outperform the S&P by 3 or 4x, it's enough better that you could justify taking the risk on a brand new revolutionary thing. So what you see is now the rise of 180 public companies capitalized on Bitcoin. You also see an explosion of digital asset treasury companies based on Ethereum and Solana. Why?
Bitcoin has given rise to a business model no one saw coming, the treasury company. Unlike gold, real estate, or oil, Bitcoin has crushed the S&P 500 over the past decade, forcing the market to recognize it as a unique foundation for corporate strategy. That kind of performance doesn't just inspire investment, it justifies creating an entirely new class of company built on top of it. Michael Saylor and Mark Moss point out that nearly 200 public firms are now structured as Bitcoin treasuries, with dozens more forming around Ethereum and Solana, which regulators are still treating as commodities. Altogether, about 250 digital asset treasury companies now exist. This is no small experiment. It's the emergence of a parallel corporate ecosystem. Saylor explains why gold, real estate, or other commodities can't serve the same role. Gold is too flat, real estate already has REITs, and commodities like oil or crops don't consistently outperform over time. Bitcoin, on the other hand, has the speed and magnitude of growth to make the treasury model viable. And this is just the beginning. Most investors don't even recognize the category yet. Only a small fraction are experimenting, and fewer still are fully committed. The next stage is applications. If Bitcoin itself is the base protocol, the risk-free rate projected at roughly 29% annually, then companies like MicroStrategy or ETFs such as IBIT and SDRC are the large-scale applications built on top. This could reshape how investors view corporate balance sheets. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
A treasury company is a corporation that's capitalized on digital capital that issues securities against the underlying digital capital. Why is it it is a new class of finance company, a new type of company. There's insurance companies, there's banks, there are fund companies, there's finance companies, there are REIT, real estate development companies. There's plenty of types of companies and there's operating companies. Why is a treasury company new and different? It's because the Investment Company Act of 1940 prohibited publicly traded companies from capitalizing or leveraging on securities portfolios. That's why there's never been a Mag 7 treasury company. There's never been an S&P treasury company. You can leverage and you can 100%. This is why Warren Buffett has to sell Apple stock. This is why the Berkshire Hathaway portfolio of securities stays below 40% of its liquid assets. That's why he has so much treasury bills. The Investment Company Act created a carve-out for sovereign debt of the United States government. And so even though those are technically securities, they're deemed to be not securities or commodities for the purposes of the SEC 40 Act. That being the case, for any of these strategies to work, you have to go to 100% or more leverage. If you're only holding 10% of something, it's not enough exposure to make it a type of company. So the treasury company was born with the arrival of digital commodities, and specifically Bitcoin, the digital scarcity. You could lever a public company on gold, but gold is not exciting enough. 99% of investors don't think gold is a good long-term asset. It kind of tries to keep up with the S&P, but as a practical matter, to break through a new thing, it needs to be an order of magnitude better. And so because Bitcoin has been able to outperform the S&P by 3 or 4x, it's enough better that you could justify taking the risk on a brand new revolutionary thing. So what you see is now the rise of 180 public companies capitalized on Bitcoin. You also see an explosion of digital asset treasury companies based on Ethereum and Solana. Why? Because they're de facto being deemed commodities by the current administration. So they have de facto commodity status. If any other token were deemed a security, you couldn't pursue this strategy. That means all told, you got about 250 companies that are digital asset treasuries. And, and you would say, well, can I do it with gold? Not really. Gold's too slow, too boring. Real estate, you've got REITs, but real estate underperforms the S&P. Soybeans, oil, people tried all sorts of things, but at the end of the day, if you've got a digital commodity which outperforms the S&P, you have enough performance to create a treasury company. Now the issue is how will the industry develop? And we're in year one of this thing being birthed. And of course, 90% of the investors don't even believe it's a category. They don't even recognize it. 1% are enthusiastic about it. 2 or 3% are stumbling around. I think it's interesting to think Bitcoin is the protocol. And when I look at it, I think that's my risk. If you're a Bitcoin maximalist, that's your risk-free rate. And so I think it's like 29% a year for the next 20 years. That's if you want to buy the protocol. And if I want to invest in anything else, it's got to outperform that by a large margin. It's got to be like 40% a year or 50% a year. And so the Bitcoin treasury companies create things. Security is an application on the protocol. IBIT is an application on the protocol. MSTR, STRC, they're $1 billion, $10 billion, $100 billion application of the protocol. They move. People kept waiting for it. Well, how do we get a circular economy and how do we get people to spend Bitcoin? Well, $3, $4, $5 billion a day trades in 6 hours in the layer 3, application like on MSTR, or $4 billion or $3 to $4 billion in IBIT trade every 6 hours. So the protocol is being fed by the applications, and I think that'll continue, and people are going to invent them at a ferocious rate.
Mark Moss says the global financial system today holds about $700 trillion in assets, much of it earning between 0 and 8%. Hundreds of millions of retirees depend on those returns to live, which is why bonds and treasuries have always been so central. The problem is yields are weak, and traditional instruments aren't keeping up with demand. Bitcoin, with its speed and higher return potential, opens the door for new types of financial products and institutions. Moss explains that the fundamentals of finance won't disappear. There will always be savers and borrowers, which means institutions for custody, security, and lending will still exist. People will continue to need mortgages, car loans, and business credit. Insurance will remain vital as well. Warren Buffett demonstrated how powerful the concept of float can be in insurance, and tying that float to a Bitcoin standard could make it even more impactful. He also points out that companies will still need to raise capital, and markets will still need price discovery. The difference is that the traditional 430-year-old equity system, which has always been tied to fiat money, could evolve. Securities may migrate onto a Bitcoin-based framework, one that is faster, stronger, and far more transparent. Let's get back to the interview.
Unless you're Michael Saylor and you've studied the history of technology as well as read the fantasy books, it's hard for most of us to see the future. But when we have a new asset like Bitcoin that's the digitization of capital, and it moves at the speed of capital, we have a new set of building blocks to build new things. And so we can kind of think about the financial system as we have today and then how this transforms it. And so we can kind of think about maybe what doesn't survive in the financial system and maybe what moves forward in the financial system. And so if you think about the $700 trillion sitting in the financial system that's earning somewhere between 0 to 8% right now today. But we can take this digitization of capital and then we can slice it up, as Saylor showed us, with different types of preferreds and different types of instruments that can provide something. As he said, typically treasuries have sat in that spot. We have 250 million people in the developed world right now, retirees, depending on some source of income. Again, $700 trillion of capital sitting on that income. And it needs better income, better yield, something safer than bonds. And so this new asset, this new digital asset that moves faster, that gives us this better CAGR, that gives us that room to then leverage into the S&P 500 and leverage into the debt and credit markets, it allows us to do these things. So I think some of the types of new financial institutions that we see kind of getting built on top of this are sort of interesting. Like, obviously, we're still going to have creators creating more than they consume, and there's going to need to be savings. So there's going to be financial institutions that will handle security, that will handle custody and things like that. I think we'll always have a need for credit. So we'll have financial institutions that are still providing credit. People are still going to need to buy houses. They're still going to buy cars. We're still have entrepreneurs that need capital for businesses as well as scaling businesses. It'll be, as Mises would call it, commodity credit versus circulating credit. We'll be issuing credit off of savings. It's not just conjuring out of thin air. I think insurance is going to be a very interesting financial model in the future, specifically with Bitcoin. Warren Buffett showed us the power of having a float with insurance companies. So imagine if you're good at adjusting risk, if you're good at writing risk, you get the power of the float, put that into a Bitcoin standard. I think that's pretty powerful. I think about liquidity. So Bitcoin is, of course, peer-to-peer electronic cash. And so, like, I could peer-to-peer electronic cash with any of you here, and that's great. But if you're Walmart with 10,000 stores globally doing $680 billion, peer-to-peer electronic cash isn't really working. So you're still going to need payment providers. You're still going to need to pay hundreds of thousands of employees. You need payroll companies. So a lot of financial institutions in that space. And then ultimately, the last category, I still see, I think, a lot of improvement. I think where these treasury companies move into this financial future is securities. So we're still going to need, companies will still need to raise money, we'll still need to bundle the money, we'll still need price discovery in the markets and things like that. But the difference is that we've had, this equity security market for 430 years built on fiat. And I think it all just transitions over to Bitcoin, moves faster, it's stronger, more transparent. And so really what happens is the Wall Street, the financial institutions are still there, but the Wall Street scaffolding that we have today is mostly collapsed. Things move faster, more transparent, and on a Bitcoin standard. Second, I would also just sort of challenge you here, Saylor, talking earlier just now about 10 years. I'll be back in 10 years. I'll tell you if it worked. Earlier today, he was talking about, I can't tell you about 15, 25 years. I'll tell you about 10 years. So right now, we have this massive disruption with AI, and all the business models as we see them today are being disrupted. And so the traditional model is we'll pay you back with future cash flows. Okay, what future cash flows? In 10 years, you're still going to have future cash flows versus sitting on the assets. So, right, most people are paying you back on a promise, a future that'll have those cash flows with no guarantee because you have no assets, versus actually having the asset base today. He's given you lots of other ways he can pay the dividend. Worst case scenario, we don't come to that, but worst case scenario, you have the asset. And so I think it's a different way that it's being done today because we have this new asset, right, financial capital. But that's how I'd sort of address that.
What's emerging isn't just another asset class. It's a rewrite of what a corporation can be. For centuries, businesses anchored themselves to land, commodities, or fiat-based balance sheets. Now, Bitcoin is carving out a new template where the reserve itself becomes the growth engine. Treasury firms built on digital assets are no longer fringe experiments. They're early signals of a parallel economy taking shape. This shift carries real weight. Retirees who once depended on bonds and institutions that long leaned on treasuries are discovering those instruments can't deliver the yield they need. In that vacuum, Bitcoin isn't just outperforming. It's providing a foundation for new kinds of capital markets, new lending models, even new ways of pricing risk. That's why what looks like speculative excess to some may in fact be the early architecture of the next financial order. The real question is whether traditional finance adapts and integrates, or whether the digital native system grows large enough to bypass it entirely. So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.